Awesome. So,
kia ora everyone.
thank you everyone for joining us, and sorry about the slow start here. We will hopefully make up the time. Just to quickly introduce ourselves, I'm Liv and I head up marketing at Simplicity. This is my colleague Jennie, who heads up communications and education. So we are a team, and then we've also got Saranya here to your right. My right too, yeah, who heads up our investor services team. So talking to and helping members with any kind of queries, questions.
She's the oracle, basically.
She is the oracle. Yeah. We were supposed to be joined by Rachel, our co-head of lending and kind of property expert, but she is unavailable today. However, we have got.
I squeezed all the juice out of her and showed her some of the questions that had come through relating to home loans. So when it comes to that, but I will do my best to relay some information, some interesting information.
And Saranya also kind of deals with some of that stuff in terms of day-to-day investor queries, right? You and your team. So you are in good hands, hopefully. So we thought we'd just start by going through a couple of top line stats. Research master over here, Jennie, kind of did a bit of desk research around studies around women and finances in New Zealand.
Which there are a really good amount of studies.
Yes.
Not that the results are anything to celebrate, but it's good that they're looking at this.
Yeah, absolutely. So we'll go through a couple of key things in kind of, we've divided it into some categories around different I guess, focus areas for women and finance. We've had some great questions through already. So we will do a couple of Q&As at the end of each kind of focus topic. So you can feel free to ask any questions as you like, and we will kind of answer those at the end, or we'll try and pick them up as we go through each topic. So we'll just see how it goes.
Quite a low tech kind of situation. We've got a laptop there on a pile of books, which I'm going to be trying to move the presentation, and we'll be doing the best that we can. But I hope you're just happy to join us for a bit of a chat, basically.
Exactly. Casual like Simplicity is, right?
Yeah, for sure.
Cool.
All right.
So, women and money in New Zealand. So as a lot of you probably know, women face some unique financial challenges from navigating what is very much still a gender pay gap in New Zealand and globally, juggling career breaks, so having family, and also, funnily enough, planning for a longer lifespan than our male counterparts. So yeah, we face unique challenges there compared to.
A lot to think about.
Yeah. So some stats that Jennie kind of looked at from her research. So
yeah, so we make up just slightly over half of the New Zealand population. We have a great life expectancy. We're expected to live at least a few years longer than our male counterparts. But as Liv said, we do face some pretty significant challenges, and the main one is income disparity. So you probably hear quite a lot about the gender pay gap. It's a global phenomenon. It happens everywhere in the world. In New Zealand, it's sitting at about 9.2%. So basically, for every $10 that a man makes, a woman's making $9.
Oh, yeah.
It's a disappointment. I know, it is a bit disappointing. It's a lot worse in other parts of the world, but the disappointing thing from our perspective in New Zealand is this hasn't shifted for years. I think, did you say it was 6? It's been at that rate for about 6 years.
Yeah.
And that is further exacerbated by other areas. So if you're a Māori or Pacific woman, then the pay gap is even greater. And even more depressingly, as we get older, the pay gap actually can increase over time. So that's what we're up against.
But I think something that really disappoints me about that, in terms of that not shifting, is that there's a whole lot of noise about it in the industry, and there's a whole lot of companies saying how great they're doing and all this, which is good. It means that we're moving forward, but it's not actually fundamentally changing things.
I remember at university, which is a long time ago, maybe 20 plus years ago, when we started, us women got given a Kate Shepherd $10 note, but it was only worth $9. It was by a women's group at the university. So even back then, it's a very, very persistent pay gap. But I think we're
No,
We're working on it.
I like that because most of the times they're like, oh yes, there's a role advertised, but they don't say, a lot of them are talking about it, right? Like advertise it with the pay, doesn't matter who gets it. So it's
A
always
bit
in
of
the top.
looking for some transparency.
Yeah.
Exactly. Some of the factors driving the disparities, and these are going to come up a lot, but I do promise you that this is going to be an optimistic, in the end, kind of action-focused presentation. So the disparities are driven by the type of work that we do. So industries dominated by women, all the care industries, cleaning, that they tend to be paid less. There's a lot more women doing part-time work or unpaid care roles when they're at home looking after their families or potentially looking after elderly parents. And then we also take a disproportionate load or impact when there's a separation or divorce, if we're impacted by domestic violence in our relationships, and things that sort of affect society, like the recent COVID pandemic. It was actually women who lost their jobs over that period.
Financial well-being, which we will go over a little bit more soon in terms of financial literacy, but 80% of women don't think that they are doing very well financially, so low to moderate. And a whopping 65% of Kiwi women worry about money on a monthly basis, which, I mean, at the moment, in terms of the last couple of years, makes total sense.
Yeah.
Yes.
And it's more than men. What those stats on the screen don't show is that we disproportionately worry about money more than our male counterparts. So
yeah. And I don't know if we cover this later on in the presentation, but worth pointing out now, despite the fact that we rate our financial literacy as lower than men, we're actually better at it than we think. There's a real perception gap where women are actually managing household finances, they're working, they're juggling a lot, but we lack confidence, and we're likely to say that we're not very financially literate, even when actually we know more than we think. Yeah.
All the budgetary.
Okay.
cool. So let's move on to KiwiSaver, which, I mean, for simplicity is a big part of what we do, right? But the bad news is that women on average have lower retirement savings than men, and that is for a range of factors, most of which we've already discussed, the gender pay gap being a really big one. So that 10%, almost 10% pay gap means that KiwiSaver balances are naturally going to be lower, interrupted careers via raising kids, higher incidence of part-time work, which is often linking back to being the primary caregiver for
wider families. Yeah.
And other, as you said, familial commitments. So let's look at a couple of the stats. So despite there being only a 10% gender pay gap in New Zealand, the superannuation gap is more than double that. So it's actually growing. So in 2021, it was reported to be around 20%, and in 2023, so 2 years later, it's gone up to 25%, which is a little bit scary.
And this would be problematic anyway, but when you think about the fact that women generally live longer than men, so they are going to be in retirement for longer, it should actually be the other way around. We should have 25% more than our male counterparts to make up for those years. The widest gaps are between the genders come in our 40s and 50s, and that's sort of after, I guess, many of us take time off to raise our families, and then we're behind the 8 ball going into our 40s, and that sort of compounds into our 50s. Great, looks like I've got a question come through. But it's a real issue, and I was surprised by this, but there's a growing gap in the younger generation. So the 18 to 25-year-old women are 23% behind their male counterparts in terms of what they're saving. So if you understand compounding interest, and you know that a dollar that you put away now the returns will compound over time, you know that time is like a critical factor. So if we're not saving in our late teens and early 20s, that's going to have a real impact later on in life.
And in terms of some insights around how women deal with their finances, deal with their KiwiSaver. The majority of women contribute 3 to 4%, so that kind of lower end. So as Jennie and I've gone over lots in our podcast, you've got 3, 4, 6, 8, and 10 that you can contribute.
Sure.
Not the expert. And I mean, I think that's similar for men, but fewer women contribute at higher rates, so up to that kind of 10% level compared to males. women in general feel less prepared for retirement, which, you know, is due to so many of those factors that we've been going over and we'll keep doing.
I guess a cool thing though is that the very nature of KiwiSaver, like KiwiSaver's started in my working life. I think women are starting to think more about their retirement. There's lots of KiwiSaver providers that are doing retirement planning and things. So you feel like that might be something that starts to shift. The very fact that we're actively saving for our retirement, whereas before it was just a pension, right?
And up to the men, maybe.
Yes.
You know?
So hopefully on all these stats, there's some things that are going to sort of start to shift the dial.
And so we've had a few questions
yeah.
come in. So before we move on to property. So let's go over the ones that came through, and then we'll see whether that the question that's first come through is to do with KiwiSaver or other. So I think this one is probably for Saranya. So regarding maternity leave and government contributions, what can someone do to ensure that they're getting the most out of KiwiSaver and not kind of like missing out compared to the men who keep working through that?
Absolutely. I mean, this is something that I have a personal experience from. When I had Adi 3 years ago, Adi's my little boy, I didn't keep an eye on my KiwiSaver myself because I was in with simplicity and I was not as educated as I am at this stage.
It helps working in the industry, right?
Oh, definitely, 100%. So I got only about $300 and I only knew that the year after when I was going, where's my KiwiSaver government contribution?
Right.
So
you got 300
versus
over
the 520.
Right. Okay.
Yeah, right. So you didn't
Just over
make
half
the threshold
No,
for the
I
full
did.
contribution.
Yeah, of course, I took a whole 1 year's break, and which most of mums do as well. So I think we need to be very much aware that the contribution is not a calendar year. It starts actually ticking from July, the 1st of July to the end of 30th of June. So a little bit, probably just a little reminder as to this is how much your account is at this stage, and you need to cover that.
You need to top it up.
Top it up to get that amount, and not to wait until the end of June, because sometimes we put it on the last day and it doesn't qualify for that year. So probably just do it slightly in advance. So
because we were talking about this just before we started, and it's really cool how some companies are starting to contribute to KiwiSaver even while staff are on maternity or paternity leave.
Yes.
But it's not your employer's contribution that count towards the government contribution, right? It has to be your contribution.
Absolutely.
So even if that's happening, you have to remember.
You have to still remember that, yes. Luckily, there are some changes to happen as well, but still from the government's point of view, so we'll just hold that to the government to decide. So April, there will be a small change towards paternity leave. So government is still going to start putting in 3% if the mum is also putting in 3% in the account. So we'll keep you guys updated about it once it all goes live.
So again, that's on the female to say, I'm going to keep contributing. So the government will not give you that match that 3% if you don't also put in the 3%.
Yeah, best thing is to do a direct debit. A smaller amount would not hurt your pocket. So 20 bucks a week is what we say. So if that's possible.
Yeah, that's going to get you
to the government contribution, but the 3% would mean that you have to put in at least that 3% level, right?
Yeah, absolutely. Yeah, match up. Yeah.
And how would that work in terms of if you're not being, when you're on mat leave and you're not being paid your normal salary, how would that work to work out how to put in 3%?
Oh, I don't know. We'll have to.
I'd say go and talk to your payroll actually as part of when you're leaving, and go and say, I want to do this.
Yeah, usually we don't answer that question. That's why I said
it's so personal.
It is very personal to each individual, and we always tell them to go back to the HR and work up with the payroll to say how much is that percentage. You could definitely see if you're contributing 3% when it comes into your KiwiSaver, you can see that amount. You can kind of work it out.
So maybe you can keep putting that in, but it would be under the voluntary contributions type rather than what comes through, right?
Exactly.
Interesting.
Voluntary.
Oh, that will be a little bit.
And there'll be some details to iron out. I don't know whether you can put it in as lump sums or whether you have to be making
the 3% like your pay was.
Anyway. So like we said, we'll keep you posted when the rules are kind of clear and being confirmed.
And I would say most KiwiSaver providers will keep their members informed in terms of when that change will comes about.
Yeah, for sure.
Cool. Next question was KiwiSaver for kids and single parents. How can we set up an account if they have a guardianship letter?
Oh, yes.
And do they only need one parent for a KiwiSaver account?
Yeah, that's a bit tricky though. So we can work around it. We can definitely work around it. So if someone is a single mom or a single dad for that matter, and they want to set up a child to have a KiwiSaver who's less than 18 years, or even 16, I would say, If they're moving from one current provider to us, they don't need to worry about it. One parent is good to go. But if it's a brand new KiwiSaver account, since it's a legal requirement to have two people as guardian, if the mum has a guardianship certificate or a letter, you would call, it comes from the court, we would be able to set that up for them with one parent.
Okay. So you might need court documents.
You do need court documents.
You do need court documents.
Yes, you do.
You might.
To prove that you're the sole parent.
Yes,
Yep.
just to say you're the only guardian, and we can have them as both mum and dad, and we can rule that out as a one-off.
Okay, so
So get in touch with your KiwiSaver
Absolutely.
provider and talk
we
it
can help you
through.
through
Yeah.
how to do it,
Yeah.
but it is doable.
Doable.
So normally you have to have two guardians. If you're a, I guess, court certified single, you can do that. Okay, cool. And the last question that's come through regarding women in KiwiSaver is, how can I, and just caveat here, we can't give financial advice, increase my KiwiSaver savings? What are some things that I can do, given that it's, there's that disparity between men and women? So I guess tips and tricks.
We've just been talking about it to an extent, right? So it's working out if you can keep contributing while you're not working, or on maternity leave, in order to get what will hopefully be the government contribution, 3% plus is it plus the government contribution?
What's that?
So if the government's contributing 3%, are they also doing the?
Oh, they're
15?
521.
Yeah.
Oh,
Sorry, we should have worked this out before we got online. Anyway, basically finding out what you can do to maximize the contribution that the government will make alongside you. The other thing I noted down was that you can increase or decrease your contributions at any time. So a really good thing to do is to always contribute the maximum that you can. When you're first working and maybe you don't have a lot of, you don't have any dependents, or maybe you don't have a mortgage, that might be a really great time to put 10%, like go maximum.
Especially if you're saving for a first home and you want to withdraw it, right?
Yes, absolutely.
So
that's not going to help you in retirement.
No.
And then when you need to dial it back, you can totally do that. It's really easy to change your contribution rate, but then don't forget after that, like to reassess that on an annual basis. Actually, can I afford to put another % in? Which going from 3 to 4% can make a really big difference at the end, but you might not notice it so much in your kind of fortnightly pay packet. So it's really worth just regularly making sure you're contributing as much as you can. Yeah.
Should we check?
I can't. I've got this weird. Sorry, guys. I can see that there's 3 questions, but while I'm sharing the screen, I can't.
Okay,
check
we'll go through the questions as soon as we've finished with this
I feel like
presentation.
we look like we don't understand technology, but we're just having a bad day.
Okay, no. So for now, that was all the questions that came through on KiwiSaver in advance. So let's move on to women and property, I think it is. Cool. So this gender pay gap that we've talked about is actually the biggest barrier to home ownership for women. So women are paid less, they have even less KiwiSaver proportionally. It naturally becomes obviously more difficult to save for a house deposit, right? And that's already really hard in New Zealand, especially in some of the bigger cities.
Yes.
Yeah.
So some fun and probably less fun facts. So research out of Australia, based on what men versus women get paid, show that women will take on average 10 months longer than men to save a 20% deposit, right?
And like that's a whole extra year, right? And if you think about, we've recently bought a house in Auckland, ouch. And in a year, the price, the difference in prices. So if you're waiting an extra 10 months to get that deposit, the house prices could just move further out of your reach.
Generally, I mean, there's dips, obviously, it's not a straight line, but generally house prices march upwards.
Yeah.
So
The longer
if you
it
are
takes you.
taking a year longer, you're going to buy, in a lot of cases, not all, you're going to spend more than your male counterparts. So single women particularly face these challenges in entering the property market. But in saying that, female ownership, so owner-occupied property, so when you're living in the house that you've bought, actually exceeds single male ownership.
So cool.
Yeah, it is. So, I mean, why? So the research that Jennie here did kind of showed a whole lot of factors around women being better at budgeting, cutting back on expenses. They are more likely to do the work because there's a lot of work in some of these cases to seek government grants.
Yep, and to they're more happy to work with other people, to ask family for help, or to buy with a friend, that kind of thing. They're much happier to look at alternative ways to do it.
Or potentially, I guess, like living with others in order to save more. So kind of, you know, all of those things coming together.
But this is a cool, this is the fun in your fun and not so fun facts, right? It's the only fun one. But it is a great one and this is in, you know, in New Zealand. And I did a quick, unfortunately, Rachel couldn't join us today, but like I said, I had a chat with her beforehand and we had a look at our own borrowers for the Simplicity First Home Loans, and it absolutely played out. We had about 17% of our home loans are going to single borrowers, and a large percentage of those were women. So that was
awesome.
Yeah, it's great.
So on the not so fun side of it, when it comes to investment properties, it is absolutely the other way around. So you've got women, female only owners of investment properties around that 21 to 22%, which is then compared to over 26% for men. So it's, I mean, 5% might not seem a lot, but that's bigger than the gap between female and male owner occupied.
Yeah.
Ownership.
And I think in the next slide, got some of the sort of specific barriers. Yeah.
So the barriers as to why there's that whole a little bit harder for women than men, even though women are doing really well with owner occupied properties. So financial literacy and financial confidence. So when we talked about how women are feeling in terms of the financial well-being, so women don't believe that they can do as much in general.
It's also the risk, right? Like,
oh, you're being risk averse. Yeah, good shout. Yeah. So
buying a house to live in feels very different to buying an investment property.
Yeah. So I would say buying a house to live in is for security and stability, versus buying in the property market for investment is probably more.
Even managing it. So the next one is around gender bias in the real estate industry, and that's not just the purchasing of it. That's also the property management companies that you might have to work with, or you might have to work directly with tenants, and that might be something that worries a single woman more than a single man.
So yeah, there has been reported gender bias in the real estate industry. So I mean, I guess that would speak to, say, you're going and looking at investment properties. It might be a little bit easier as a male within those kind of networking and relationships and appointments and house viewings to kind of feel more comfortable in that sense. Coming back to that gender pay gap, lower income levels can hinder, you know, from the banks or the non-bank lenders, the requirements that you need for your equity or deposit for your property. So if you've got less available, you're less likely to get approved for a home loan. And then there's traditional and hopefully changing societal expectations, which kind of traditionally discourage that whole growing your wealth, earning a lot of money. That's
chasing
more of
those big money careers.
It's traditionally more a male kind of driven concept than females, but I feel confident that it's changing. There's a whole lot of women out there that are trying to change the game. So
absolutely,
including us. So
here we are, changing the game.
Let's go back up, and we had a couple of questions come through in advance around women property.
We did. Sorry.
So if we can just quickly run through them, and we can be Rachel's earpiece here.
So the first one was around barriers to owning property for women in New Zealand. I think we covered that. It's mainly income, because loans are assessed based on your income. So the gender pay gap really plays into that.
And having kids. So you were talking about before.
When we started looking at buying a house, I was the problem because I had taken time off to have my children, and when I'd gone back, I was working part-time. So we literally had to wait till I had worked for full-time for I think a year before we could start to look at that as an option. So yeah, that's going to hold.
And so imagine being a single female doing that.
The next question was, is it possible for one person to purchase a house with Simplicity? Again, answered that absolutely. 17% of our borrowers are buying on their own, and loads of them are women, which is really great. There's quite a few questions actually. What are the requirements for a first home mortgage with Simplicity? So the two main ones are you need to be a Simplicity KiwiSaver member, and this needs to be your first home. So we're only lending on first homes at the moment.
For now. That's not really a woman-specific question, but hey,
no,
a valid question regardless.
Yeah, and there are obviously some financial requirements, but I'd recommend going to our home loans page. There's loads of FAQs on that page, and also a calculator, so you can plug in your kind of numbers and see what you can borrow. Cool. Any tips for increasing the potential of getting a first home loan approved in general? Rachel said this is a real hard one because it's quite personal or individual,
do,
which
yeah.
we can't do. But her kind of top level advice was
Not advice.
tips.
Not advice. Drill advice. We do not give advice.
Her top level thoughts were having a stable income, as we've discussed, and having a good savings and financial management record. So you are going to be handing over your bank statements, and someone's going to be going through those. And if they can see that you are paying bills on time and that you have a good record of saving money, those things are all going to really count for you. So prior to buying a house, get really rigid.
Maybe cancel those buy now, pay later.
Yes,
schemes.
absolutely.
We like to talk
wrangle that
podcast.
credit card, get that under control. All those things are going to count towards, you know, a
And
better
especially in
outcome.
those 6 months before you're actually wanting to press go, right?
Yeah.
Cool.
And then the last question, and I think I'll pass this one over to our resident expert, was how much can I as an individual take out of my KiwiSaver balance for a simplicity first home loan or to buy a house?
Yeah, so first home withdrawal really is basic, being KiwiSaver for 3 years. Everyone should be knowing that. And then you should have not withdrawn from your KiwiSaver for the same reason prior. And if you had changed, your situation's changed, then we'll need a letter from Kaingawara to say that you're still in the same position as a first home buyer. The other things I would say is, apart from $1,000, which we have to still hold on the account, which is a requirement, it's just
so you have to leave 1,000 in your
government
account.
definitely leave it. And then there's
It's
also
a mental thing, just so you don't go back to zero.
It seems an arbitrary number.
Yeah.
yeah.
I think it's good to leave some. I'm not saying that. It's the number that's an interesting one.
$1,000, you can't touch that. It goes straight in. And then there's also a couple of other things, like if you've moved any Australian transfer, that can't be touched.
So if you have superannuation that you've transferred from Australia, that has to stay in your account
way more
as
than
well.
what you have in your Kiwi balance, right?
Potentially,
Probably, yes, absolutely. We've seen that quite a lot, but then you can't touch that because it is, again, it's locked up with Australian rules. The last one will be a small tax, which will be charged. So they will be deducted from your balance, and that's all you can withdraw. Right. So I think best thing, get in touch.
That doesn't go to us, right? That's tax, like.
Oh no, that's tax.
IID stuff.
They'll anyway be charged in March, so we just do it in advance because they're doing a withdrawal. So.
But when you do go to do that first home loan withdrawal with us, whether it's for a simplicity home loan or a bank home loan or whoever you're lending with. The team will basically tell you how much you can withdraw, right? Like you don't have
they'll
to
be very specific.
Very specific. They send you a letter that says how much exactly you'll get.
Right. So you don't have to know in advance. You don't have to say to your KiwiSaver provider, this is how much I want to take out. Your KiwiSaver provider will tell you.
Yes, we'll issue you a letter, even if they don't want the whole thing to be taken out. They can even take a partial amount out.
So you'll say what you can take up to.
Maximum.
Gotcha.
Yep.
Cool. Okay.
Cool. Well, those were the home loan property related questions that we had.
Let's move on to investing. You wanted to go.
Yeah.
So women, as we talked about, less risk averse, which kind of means has been found in research to show that they're less likely to invest in shares, so the stock market. And that can obviously, or being more risk averse in general and investing less in higher risk, higher potential returns type of assets can impact their long-term wealth accumulation. So the FSC, Financial Services Council, in New Zealand did a whole lot of research around women investing. As I've just said, they appear to be more risk averse. So female survey respondents through the FSC's 2021 research showed that they generally preferred kind of those lower return type investments like cash, term deposits, and putting into KiwiSaver, which KiwiSaver we think is great. But kind of feel safer. So 68% prefer those lower to moderate risk options, and subsequently reporting that they're okay with the low returns, which is a little bit worrying. Fewer females tend to invest in these really high risk things like crypto. Also, they invest less in managed funds. And as I said before, the share market compared to males. They have over half of females have, self-report having limited financial knowledge or experience in terms of investing in the share market or managed funds.
There is interesting data out there, though, that despite all this, when women do invest, we actually do better. We do. Yeah. So there's a lot of us that are not doing it or are worried about doing it, but those that do go into it in a very considered, thoughtful, well-researched way.
We're more
And
analytical, right? And I mean, that's just a great.
and actually, in terms of returns
Yeah.
on their investment, are a little bit more successful than men. So
it's more a perception than an actual
yes.
kind of thing.
Yeah.
But shifts in attitudes and behaviours are being reported to be happening. There's obviously a lot more women in the financial services industry like us. There's a lot more sharing of female stories, empowerment, advice. There's more female financial advisors, and so general experience that helps kind of bring women up. And I think we need more of that. And then there's these kind of newer platforms in the last, maybe even more years, like Hatch, which was all female founded, Sharesies, which one of the 3Os is a female, a whole lot of newer, more, I guess, easy to use KiwiSaver platforms have started, and it's kind of,
a lot more online information and sort of a bit more user friendly and
accessible. So it's democratizing investing in a way, and reducing some of those barriers that one have talked about. But given what's kind of coming up and the proliferation of women in the industry, especially helping bring women up. So there is hope.
In our next slide, we pulled together some pretty pictures of some of those awesome women in the industry, a bit of like blatant self-promotion. There we are. We obviously have a podcast, but there's lots of women, increasing numbers of women that are investors and are talking about their experiences and sharing kind of knowledge and things. So Girls That Invest are amazing, and they're a global,
phenomenon.
That little cartoon lady Ruth from Happy Saver is just generates some incredible content. She has a podcast and a blog, and she's awesome.
I love the curve because they're really funny.
Yes.
Sophia's kind of like feel like a bit of a spirit animal. She's very, bit of a well, no, more you. She's a bit of a hot mess.
Did I put that Tales from a Financial Hot Mess? There's Frances Cook there. Basically, there is lots of different women
from different backgrounds,
and they are building their wealth in different ways as well. So I feel like there's someone out there for everyone. You can find your spirit animal, your fellow financial hot mess, and go on a journey with them. That information is super available. It's you can listen to it, you can read it, you can watch it. It's
there are a couple of just you skipped ahead a little bit, but there are a couple of investing questions that came through, right?
This is still about it, I guess.
Yeah, cool.
So one of the questions was, what are some of the specific challenges women face when it comes to investing? I guess that's all the things that we've already spoken about.
So pay gap being the big one.
Yeah, not having as much money to invest, lacking confidence, maybe not knowing where to start. Sometimes I think women, and I was definitely like this, chasing wealth or trying to be rich didn't seem like a very moral or important thing to do. I definitely didn't prioritize it. I thought there were more important things to do. Not really understanding that a solid financial foundation allows you to do a lot. It allows you to chase your own dreams, be generous with your friends and family, support your community.
I wonder if that kind of taps into that traditional societal expectation and culture that women were kind of more nurturing, men are like the go-getters.
Yeah.
Which hopefully is changing.
I definitely think that's
yeah.
So the next one was, are there specific resources or support networks available to women who are interested in investing? Here's something we prepared earlier. Yes. And actually one thing I didn't mention is quite a few here and others do sort of longer form courses as well. You can do online courses or webinars. There's all sorts of ways to sort of deepen that learning. What guidance would you give to other women who were considering starting their own investment journey? Yes.
Get started.
Don't overthink it. Maybe start small, learn as you go, and just get into it.
And use these resources from other kind of kick-ass, and some young, some older. I mean, you've got big scale here of ages and stages and whatnot. So
you're calling us kick-ass.
Don't back yourself, Jennie.
Right.
But there's heaps of resources out there to start learning and getting started.
Yeah. And the last one's really similar, is like, what are some easy ways to start investing? Like, how would I start? I wrote a note that like, it's really it's an individual thing and you'll find your own way. But for me personally, the first thing I did was come to grips with KiwiSaver. So actually understanding that I'm already an investor.
Absolutely.
If I'm in KiwiSaver, I am already an investor.
Yeah.
And by understanding my investments through that, which felt quite safe, and it's kind of government, you kind of feel like it's not as risky as other investments
that women tend to take, right?
Yeah, but I started to understand the impact of fees and how returns work and compounding interest and the different fund types. I felt like that gave me the confidence. I was already doing it to start doing some other investing. So that's a good place to start.
Yeah, and there's heaps of different platforms that you can start too, right?
Yes, I was going to say that.
Yes.
Good point. Also, if you get anything extra, like if you get anything like a bonus or any funds which come into your account which you were not expecting,
anything like that.
That's great.
Birthday money from your grandma,
Whatever that is,
Invest it.
small or big, just invest it, because you're not expecting that. That's not in your budget, and
shout.
it just comes out.
Yeah. And there's so many easy platforms from us, like managed fund providers, that you can invest outside KiwiSaver via our website. There's Sharesies, Hatch, like we talked about. Other KiwiSaver and fund providers have some great funds that you can look at.
and they're not all kind of hidden behind a broker anymore.
No,
like
you can do
all your own research in the comfort of your own home and decide what you feel comfortable about. So
we're only supposed to have 5 minutes left, so let's.
And we have got 5 questions.
Oh, there we go. This was how to get started. So use some of those resources. Sorted.org is a great one that I don't know if we love it on, we always talk about it on the podcast, but it's not women specific, but it is great for, I think more women should use it. Listen to a podcast, follow people on social. Setting goals, I think, was a big one, for retirement or for first home or wherever you want to get to.
Or even say, this year, I will start investing. I'm going to do what I need to do. Cool. That's a good goal too.
Pay off debt, which also comes back into that first home loan. Banks and home loan providers don't like to see debt.
And debt costs you money.
Yes. That's outside of home debt we're talking about. Making sure that you are optimizing your KiwiSaver in terms of your provider, your fund, fees. That's our favorite thing to talk about. And as we said, start investing.
Yeah.
Cool. Moving on to our final topic.
No.
We covered our financial literacy, so that was it. Cool. Okay. Well, now let's get that
questions
thing up so we can actually look at the questions. Which there's plenty.
So 8. New share? No, not new share. Sorry, everyone. How do I just get
learning to use a computer?
So not stop share.
Yeah, there we go. And go to
actually now finding. Okay.
There we go.
All right. Oh, so first one.
Just going to bring it a little bit closer. Why is the KiwiSaver gap bigger than the gender pay gap?
Good question.
That is a good question. I think it's around the contribution rates. So if women they're making slightly less and then they're contributing slightly less, that's less of less. So that's going to have a cumulative effect on your KiwiSaver.
Also, that gender pay gap would then, if you apply compounding returns to that, so you put less in terms of your income being less, and then compounding returns apply to that balance, it's just going to get bigger and bigger, right?
Yeah.
So it kind of makes sense. There's a few different angles. I'm taking time out from the workforce, so that
making no contributions.
Hopefully people start making contributions when that kind of government 3% match kicks in. But there's a whole lot of things that I guess women being less financially off then compounds it when it comes to your investments. So a little bit scary.
Good answer. Okay, the next question, contributions regarding 3 to 4% for women. However, do you have stats on other forms of investing? This may be investing as opposed to locking into KiwiSaver, which has restrictions.
There were some stats that you looked up in the greater paper. I am pretty sure that women are investing less than men. So women are actually sticking more to KiwiSaver term deposits cash.
Rather than investing in managed funds and shares.
Funnily enough, actually not just KiwiSaver. So women are investing less contribution and also investing less in general, sticking to the kind of safe and tested.
This looks like one that might be for you, Saranya. So this question is, how much subjectivity is involved in the serious illness criteria KiwiSaver used to fund bariatrics? used to fund bariatric surgery, but now this has changed and only through financial hardship now. Yet the majority of patients are women. This is a very good question. In jobs in the caring profession, earning less income and need this money to be able to ensure good health, welfare, planning for a longer life and financial well-being. You said there is a wider gap in
40 to 50 market.
yes, which is the prominent age for people requiring bariatric surgery.
It's very specific. So we just a heads up, we can't give financial advice. That's something that's really.
But you can probably advise, because I know we do get cases.
Yes, we do. I mean, it's absolutely understandable as well. Like it kind of impacts your capacity to go to work, your capacity to do stuff. So, just with serious illness, there are very tight restrictions that the person who's applying for it should really be in serious position where they're going to lose their life in 12 months. It's really very hard to say.
Right. And we don't
make
those
public trust. Our supervisor takes care of all of that. They are our custodians. They take care of all of these, and these rules are set by the legislatures.
So it's the government level.
The government level.
Yeah.
So
she's asking about how much subjectivity. Does it depend on the person who looks at your case, or are the rules pretty strict? So
for the surgery, yes, it's pretty straightforward. It's just not
very little subjectivity.
Very little subjectivity. Yes, that's the answer to it, and that's why they're promoting to go towards hardship, because it falls there
to the capacity to be able to earn.
Absolutely.
Is there more subjectivity under the hardship criteria?
Yes,
there is.
Yeah, there
right.
is.
So they're really looking at the bigger picture.
Yes, that's why under serious illness they're very restricted. Like only certain things fall there, but hardship,
which we don't decide. So 0 to very little subjectivity in terms of the illness.
Yeah.
In terms of hardship, some, but I think that they go through a process, right, with our partners' defects, to kind of work out a plan there. So. Yeah.
Cool. Well, Andrea, you can reach out to us if you need more information.
Yes, info@simplicity.kiwi. Hi, Saranya, and you'll
know who you're talking to now.
Okay, kia ora team, single female, 40, no dependents, though possibly parents very soon.
Yes.
Own half my house, considering the benefits of starting a shares portfolio to make the most of compounding interest, or if I should be channeling everything into my mortgage, should pay off in 12 more years at the current rate. Thoughts?
Sam loves this topic.
He does.
Yes.
Go, you channel some Sam.
Well, I mean, I'll channel Sam, but I mean, everyone has a different opinion, right?
Yeah.
And again, we can't give personal financial advice. So Sam in general tells people to focus on their owner occupied mortgage first, and kind of, I guess, as you term it, channel their repayments into that. Because you're generally, you don't have that kind of visibility on interest rates and what's his kind of, I don't know, what are his reasons? Because my problem is I disagree. So
well, I mean,
we can agree to disagree, right? Sam and I have plenty of healthy debates.
Yeah, I mean, I think it's very personal.
Subjective, yeah.
Yeah, and for me personally, I'm looking at trying to pay off our mortgage as quickly as we can, but I am still investing.
Same. So for me, I think diversification comes into it. So me and my husband, or my husband and I, have our own home. We invest in property, and I invest in managed funds regularly, not to a really high extent because we've still got plenty of mortgage everywhere available, left over to pay. But I mean, I just believe in kind of spreading your eggs over more than one basket. Yes, I mean, Sam's actually really strong on saying pay off your mortgage as quickly as possible. And I mean, and that's probably a real good shout in terms of the current mortgage rate environments. You know, like if we paid off a bit more of our mortgage before this year, we'd probably be avoiding some 8+%. Yeah.
I mean, I would say pay off other debt, like high cost consumer debt. Absolutely pay that debt off before you start investing.
But when it comes to this mortgage,
the mortgage,
personal, right?
Well, I went the other way around. So I started saving with investment funds. I started putting in some money into the investment funds, and when the time comes to actually refix, or took out that money and paid the
that's an interesting way around.
So
yeah, I mean, hey, look, we're a bit divided here. It's subjective. It depends whether you kind of value, whether you want to think more about diversity and spreading it out, or paying down debt, getting rid of it, and being kind of like, I guess, financially independent when it comes to that. You know, being mortgage free was probably I guess mentally a really freeing feeling.
Yes,
to
I
not
mean,
having to pay rent or mortgage.
you could go and if you're in a position to get financial advice
Mm.
and go and sit and really crunch the numbers with somebody and work out what those, I mean, you can never know what's going to happen in the market and what the interest rates are going to do, but you might be able to get a sort of clearer picture. So if that's something that you wanted to do, I think that's,
Suggested, yeah.
Cool.
not
Someone
saying we
sent a question through re KiwiSaver, but doesn't it?
No, we
appear to
answered
be
it.
as
So
well?
sorry, Andrea, you'd asked a question and we couldn't see it because of our technological difficulties, and now we've answered it.
Yes.
So, and then there's one more.
No, there's a couple more.
Oh no, just some nice
cool.
comments saying thanks.
No
Go
other
me.
debts.
No.
Yes. I suspected that was the case, and they
Yeah.
talked about mortgage specifically. But yeah, sorry, we couldn't really answer it in a definitive way because it is so individual, and we all do different things and kind of prioritize different things, right? As human beings do.
Yeah.
Yeah. Cool. Awesome. Oh well, I'm sorry that we've probably gone over just as much as what the delay that we had at the start.
And apologies about that.
Would have kept to 45 minutes, but technophobes.
Yeah, well, we've never, the three of us together have never done anything like this before. So we really hope that it was useful. I definitely enjoyed preparing for it because I feel really motivated now that this is important conversations for women to have with their friends and their daughters and their mothers, because we need to close those gaps. Because it's not because we're not capable, we are very capable.
And part of it is because we don't think we're capable, right? That was something that came up, that perception gap of what we can do versus what we think we can do.
What we're actually doing.
Yeah. So anyway, thank you to all the people that A, sent in questions and B, have attended. And we will post this recording up on YouTube, and
if you think anyone might be interested in watching it later, then it'll be on our YouTube channel.
And any further questions, feel free to either comment on the Facebook or YouTube, kind of the event post on Facebook, or
my apologies for not getting it on live on Facebook. It wanted to post it on my personal page, and I don't want to do that. No.
At least people could probably see it.
Yes.
Yeah,
I've got heaps of friends. What are you talking about?
Awesome. All right, we'll wrap it up there. So yeah, go if you want to hear more, dial into our podcast, Money Made Simple. We release a new episode every fortnight, and we kind of tackle all of these, everything KiwiSaver, of course, because we love KiwiSaver, investing, finances, all sorts.
But it was really cool to do something just for
live.
Yeah, the women.
Happy International.
Yes, and happy International Women's every day of the year.
Yeah, absolutely.
Cool.
That's good. Thank you.
See you guys.